Yeah, good morning, everyone. So, Friday we saw some marginal corrections in the US market, and some corrections in the futures are also indicating. Whereas Asian market are showing a strong trend, most of the markets are showing positive signals in the Asian market. We had seen divergence in rest of the market and the US market in recent past. In last month, if we see the US market has shown new highs, whereas last 1 month, most of the Asian market or even European market has shown corrections. So this diversion is continuing. I think the recent meeting, which is like likely an FOMC meeting in on 1st Feb, can have some bearing on this, wherein Fed will indicate where the economy is going and whether the rate cut are coming in near term or not. In fact, if we see the expectations of rate cut that has moved from March to May. Earlier, people were expecting rate cut to come in March, but now the chances of rate cut in March has reduced less than 50%, and that is there in the May. On the other hand, the economy data came in the last week in the US, that is GDP, which has come stronger than expected, and that is supporting the US market. And also, in recent past, Chinese economy is also central bank has reduced the RRR. Uh, so that has supported the Chinese economy and also indicated that they can further support the economy for revival. So, in all, mixed reactions from the international market. Near term, quite possible, we may see uh, some revival in the Indian market as well, along with Asian market, and may see some up move in the today's trade. But overall, I think the directions will be reflected, and the market will wait for the FOMC meeting on the Wednesday. Now, request technical team to take up from here.
Good morning, all of you. Thank you, sir. Today we expect positive in open and open and gap up and remain positive during the day. First, Nifty have immediate resistance for 21,470. If Nifty managed to sustain first half 21,417 above level, then we expect further rally to be continued towards 21,570, 21,640. The major resistance in upward is 21,640 and 700. To expect gap up open in Nifty. First and downside first support 21,260 for Nifty. Bank Nifty also open a positive side and first immediate resistance place around 45,140 and it managed to sustain this level. Then we expect 45,500, 45,817 upside resistance and support place around 44,400 and then 44,440 and 4440 at downside. Nifty Finance also it's trading near the support zone and managed to sustain that support zone in last week and next immediate resistance place in 20,240. If managed to sustain these, then 20,370, 20,540 in upside, and intraday major support place around 19,940 for Fin Nifty. So all three index looks positive today's trading session. Stock specific, National Aluminum looks positive. Hindalco also looks positive at current level. We already seen that last week in all metal pack looks close above the important zone and managed to sustain this level. The national minimum looks positive at current level. We expect the rally towards 150, 152 in upside and major support place around 136 138 at downside to national minimum looks positive at current level. Negative side Ashok Leyland looks weak at current level. Last week all auto pack we saw some profit booking national and Ashok Leyland also trading the important support zone and that if break 168 level Then we expect further selling pressure is continuing. Ashok Leyland also maybe see some profit booking because that is 200 TMA. You break that 200 TMA 168 level in today's session, then we expect towards 160, 158 at downside, upside 174 first immediate register for Ashok Leyland. That's it for technical derivative. I can get.
Yeah, thank you, Vikas. On the derivative front, for this month, the open interest has been a little high, from a Feb perspective. The only real difference here is that the VIX has come down. The VIX has come down from 15 and a half to about 13 and a half odd levels, which is a good sign. Now, budget announcement is there for this week. So we are tracking changes in open interest, and open interest is very flat in terms of options. So option wise, there is huge open interest around the 21,000 put areas, while there's not much open interest in the interim from 21,100 to about 21,400. Even 21,500 is flat. So there is likely to be good movement around for Nifty. It has space to move up. So we are likely to witness some buying going forward because the open interest in terms of options is flat. We might see some buying coming in, which can take Nifty all the way up towards that 21,600, 700 odd levels, probably even higher. So we are tracking the same. The PCR is still below the one levels, largely underbought. So that's a good sign. All in all, positive data. So we might witness a positive week this one, and there can be some volatile sessions where sudden selling can come in with the VIX still being a little high. So, always keep important stop losses. Another thing is that the banks are very high on open interest. Almost all banks are very high on open interest, and uh, most of them have lot of short positions which have been rolled over. So there is likely to be short covering action if buying sets in the overall market. So especially in the banking space. So look out for the same. We can witness some good aggressive buying going forward. But again, it's not for today, and probably you'll have to see the next couple of days where all the market witnesses buying, and then banks will start to witness good buying action. The best bet at this point of time that we really like is Axis Bank, ICICI Bank. These banks can witness good buying going forward. Metals look very good, especially National Aluminium, Hindalco, SAIL, Tata Steel. They have witnessed good price action along with open interest built up. So longs are being built in into the system in most of the metal names, and we expect buying to continue, especially in the metals pack. Yeah, so that's it from my side. Like to ask the fundamental team to take over, please.
Good morning. Indiabulls Housing Finance has announced that they will issue 24.6 crore rights shares for an amount of 3,700 crores at a price of rupees 150 per share. So this rights issue translates to entitlement ratio of 1 share for 2 shares held. And the record date is 1st Feb for determining this ratio. Initially, 50 per share will have to be paid, and then in the remaining 12 months, the remaining amount. In the short term, stock can see some correction as this will dilute the equity and book value per share will reduce. So that will be negative. But from long term perspective, this is positive as the fundraise will address all liquidity concerns regarding repayment of outstanding FCCBs and other debt repayments. Cholamandalam Investment and Finance result is marginally above expectation due to lower credit cost. AUM growth was at 7.7% sequentially, 40% year on year. Asset quality was stable. Stock seems fairly priced in the short term with a PE ratio of 24 times FY25. and a price to book of 6 times trailing. So this stock should be treated as a compounding stock, and one can hold from long-term perspective. Shriram Finance result is marginally below expectation due to higher credit cost. Overall, it was a muted quarter on P&L front, although loan growth has stabilized at around 20% mark on year-on-year basis and 5% on sequential basis since last 4 to 5 quarters. If you recall, historically, Shriram Finance had a issue regarding growth, and they were never able to grow at more than 12 to 14% kind of loan growth. But that has changed in last couple of years. So that is a positive thing. Also, net interest margin was stable at 9%. Stock appears cheap at 1.6 times FY24 book value, and one can add the stock on declines. And we are expecting a decent kind of re-rating in the stock. SBFC Finance result has improved. AUM grew by 8% sequentially, 40% year on year. NIMs expanded and OPEX was under control, resulting in profit growth of 22% sequentially and 63% year on year. Asset quality was stable. Only negative in SBFC Finance is that the company is overcapitalized, and because of that, ROE is depressed at 10.5-11%. Otherwise, from long-term perspective, we are positive. Equitas Small Finance Bank result is marginally below expectation. Although profit was in line, but slippages came at 3.8% versus last quarter 3.3%, which led to increase in GNPA. So that's why we are neutral in the near term, but positive from long term. SBI Life Insurance result is in line with expectation. APE grew by 13% year on year, marginally higher than industry growth. VNB grew by 11% year on year. Market share also improved between 0.5 to 1% on sequential and YOY basis, and it stands at 26.5%. We are positive from long-term perspective. SBI Cards result is below expectation due to higher credit cost, which came at 8.6%. So we've noticed that in last few quarters, SBI Cards has posted below expected results, and this quarter was no different. And profit came at around 10% below expectation. Return on asset continues to decline over here, which came at 4.1%. A year or two back, it was stable at 5%, but that is also coming down now. And before COVID, if you recall, ROA was at around 6%. So that's why we are neutral to negative on SBI Cards. Punjab National Bank result is above expectation due to consistent decline in credit cost, which came at 1.2% versus 1.5% in previous quarter and 2.4% last year. However, despite this, the ROA is at just 0.6%, which is much lower than other PSU banks, while its valuation is at already at par with other PSU banks at 1.2 times price to book. That's why we recommend to avoid PNB. AU Small Finance Bank result is below expectation due to increased credit cost as well as slippages. So credit cost came at 0.9% against expectation of 0.7%. And slippages came at 2.4% versus previous quarter 2.1%. So we are neutral on AU SFB from near-term perspective. Yes Bank result is below expectation due to higher than expected credit cost. Slippage was stable at 2.3%. Net stressed assets, which is net NPA, net restructured, net SMA, all these combined have been declining. That came at 5.7% versus previous quarter 6.3%. But if you again look at Yes Bank's ROA, it is at just 2.2%. While its valuation is at 1.8 times price to book, hence we don't see any meaningful upside in the stock. One can avoid Yes Bank. Thank you.
Good morning. CNT has posted broadly in line with expectation set of numbers for the quarter, with dollar revenue coming in at 218 million, EBITDA margin coming in at 17.9%. The company has degraded the DET revenue growth guidance and it expects to be in the range of 13 to 13.5% in CC terms versus last quarter guidance of 15 to 20%, wherein the management had indicated to be in the lower end of the range. Margin trajectory recovery remains robust. Stock is trading at a PE of 29.5 times FY24 EPS. Thank you.
Good morning. Lakshmi Organic Industries has hosted con call in the last week where we had observed that results were below expectations. So the management has highlighted that the weak macroeconomic environment continues. There was a stabilization observed in the chemical space at global level. However, the weak demand continues. In terms of margins, the margins were below expectations at 7.5%. This was largely because of the raw material prices which had increased in the quarter 2. However, it has seen some correction. And it is expected acetic acid prices are expected to be in the range of $420 to $430 per metric tons, and also ethanol prices are to be in the range of $770 to $775 per metric tons in quarter 4, which were at $860 per metric ton in quarter 2. Also, it has seen the Red Sea crisis had led to increase in freight costs, which have increased by 2 to 3 times than earlier. In terms of capex, the fluorochemical project would be functional by FY24 end, and it is going to invest in the Dahej project. The amount to be invested is rupees 710 crore, and the expected completion is to be 18 to 20 months. It expects asset turnover ratio of 2 to 2.5 times, and the capex split for specialty and essential is planned at 65 to 35 in the ratio of 65 to 35. The stock is trading at a PE of 37 times to FY25 EPS, and our outlook is neutral on the stock. Dodla Dairy Limited result has improved. Revenue grew by 10.6% on a YY basis. Also, during the quarter, it has improved its procurement at 17.5 lakh liter per day, which grew by 37% on a YY basis. And average milk sales during the quarter was at 10.7 lakhs liter per day. Domestic business grew by 13% on a YY basis, and international business delivered revenue at rupees 46 crore. That contributes 6% to overall revenue. It has seen improved set of numbers for value-added products, where the revenue from these products grew by 15% on a YY basis, and overall contributions stood at 28%. EBITDA margin reported at 11% versus 7.9% in the last year, same period. And the stock is trading at a PE of 25 times to FY25 EPS. Thank you.
Good morning. Craftsman Automation result is below expectation as revenue came at 1,129 crores, which degrew by 4.2% on quarterly basis, and it grew by 50.8% on yearly basis. EBITDA came at 220 crores versus expectation of 238 crores. EBITDA margin came at 19.5% versus 20.1% on quarterly basis and 21.1% on yearly basis. At present, the stock is trading at PE of 27.3 times of FY24 EPS, and the outlook is neutral on this stock. Thank you.
Yeah, JSW Steel reported numbers, and the numbers were ahead of expectations. The volume came in at 6 million ton versus last year 5.71 million ton, last quarter 6.34 million ton. EBITDA per ton came in at around 12,000 rupees Q and Q. It came off by around 500 rupees. Last quarter it was 12,440 rupees, and last year it was 8,000 rupees. It came marginally above expectation. The margins were at 17.1% versus expectation of 16%. The outlook for the coming period is the volumes are likely to be higher in the fourth quarter, which declined in third quarter, mainly driven by seasonally fourth quarter is strong, and also there will be higher exports. We had seen that the steel prices in the international market has moved up in the recent past, specifically in the US and Europe, and that will drive the export for the company. And also dumping from the international market to the Indian market will also reduce in the fourth quarter. So that will help in driving the demand for the company product, and the volumes are expected to be higher in the fourth quarter. Apart from that, the EBITDA per ton on quarter basis are likely to come off because of the higher iron ore prices and also coking coal prices. The coking coal prices are likely to be higher by around 20 to $25 in the fourth quarter, and iron ore prices are also likely to be higher. So both these will have impact on the costing, but and also we had seen some realization softening in the recent past, which is likely to have impact on the EBITDA per ton. And as such, though the volume will be higher, but EBITDA per ton are likely to be lower in the fourth quarter. So outlook for the near term are neutral. Anyhow, the stock is trading at around 7.2 time FY25 by EBITDA, which is at the upper end of the long range of valuations. So outlook in the near term are neutral for JSW Steel. Apart from this, the result for Tata Technology, sorry, result for yeah, that's all from me. And I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we are expecting prices in gold and silver to edge higher. So we recommend buy on dip strategy, and one should initiate a buy around 62,000 in gold and maintain a stop loss of 61,750. On upside, we are eyeing for 62,350 to 62,500 on the upside. Silver also we are expecting 72,500 to 72,800 on upside. So buying around 71,800 is recommended with a stop loss of 71,300. In crude oil, we are expecting prices to edge higher. Though it has opened gap up, we expect prices to test 65.50 on upside. So buying on dips is recommended, and one can initiate a buy around uh, 64.50. And in natural gas, one can buy for a pullback at 180 and maintain a stop loss of 170. On upside again 195, one should take profits. And in metal front also, one can buy on dips in the February contract at around 727 with a stop loss of 723. On upside again 732, 33. We recommend to take book profits. Similarly, zinc also, one can initiate a buy around 227 and maintain a stop loss of 225. On upside again 230, one can book profits. So that's it from me. I'll ask Utkarsh to take the call forward.
Thank you, sir. Very good morning, all of you. For today's trading session in USGNR, we are expecting a sideways momentum on February contract. So one can initiate a shorts positions, the six stop loss in the range of 83.22 to 83.24 levels. One can initiate a short positions with the strict stop loss of 83.31 levels for the target of 83.17 and 83.07 levels. In GBP INR, one can initiate a long positions in the range of 105.52 to 105.58 levels with a stop loss of 105.35 for the target of 105.90 and 106.03 levels. In Euro INR, one can initiate a long positions if prices breaks the level of 90.47 with a strict stop loss of 90.29 for the target of 90.70 and 90.83 levels. Thank you.